Hello everyone. Hope you all are good and I hope that you have studied previous lectures properly. We have started with the concept of pro rata allotment of shares and we have understood illustration 15 and illustration 16 about the same. So in today's lecture we are going to continue with the same chapter 1 from part 2, accounting for share capital. 21st lecture, and in 20th lecture I think I have explained illustration 16, which is given on page number 44, which is obviously a long sum, and obviously it is about the concept of pro rata allotment of shares. Yes, so in today's lecture we are going to start illustration 17, which is given on page number 46. In last lecture, I have also explained the last sum of illustration 10, which was left, which was about forfeiture and reissue of shares. Yes, I had explained it in hurry comparatively to the regular explanation. The reason behind it was that the sum was extremely simple. By now, you are completely aware with the topic of forfeiture and reissue of shares. Yes, so it was explained in short. It was explained very shortly. Yes. So, and in case if you face any sort of difficulty in understanding that, then you can write down in the comment section given below. Of course, I will repeat the same and I will surely solve your doubts. Yes, so for now, let us begin with illustration 17, which is given on page number 46 in your textbook. It is advisable and obviously it is very obvious that if you are having your textbook with you, you'll understand it properly. Otherwise, also the proper images have been captured and have been presented on your screen. Yes. So let us start with illustration 17. It says, Nupur Limited issued 5 lakh equity shares of rupees 10 each at a premium of 100%. Amount called up per share is as under. On application, rupees 5. On allotment, rupees 2 plus premium. On first and final call, rupees 3. They say applications were received 2.5 times, out of which 2/5 share applications were rejected fully and pro rata allotment was made to the remaining applications. Excess application money were credited to allotment money and still, if any surplus, then credited to share calls. Write necessary journal entries in the books of Nupur Limited. Firstly, let us understand about this question. Simply speaking, the applications have been received in excess, and that is called a case of oversubscription. Yes, we have understood this in the second or third lecture most probably about this chapter, that what is oversubscription. And what do we usually do in that case? What do we do is that what does a company do? Yes, I have always instructed that whenever you solve a sum, whenever you are writing down journal entries, you have to consider yourself as the owner of the business, that the business is yours. Yes, so that you can understand it in a better way. Yeah? Okay. So what is the general procedure in case of oversubscription that we have understood till now, except for illustration 15 and illustration 16? In each and every sum that I gave you in homework and the illustrations that we have done previously, yes, what do we do in that? We reject those excess applications and the amount is returned to the share applicants. Yes? But this used to be the case up till illustration 14 and several sums that I gave you in homework from exercise. But from past 2 to 3 lectures, I think, mostly 2 lectures, we have started with a new concept, that is pro rata allotment of shares. What do we do in this case? That we are dealing in a different manner with the oversubscription of shares. We do not reject it fully. We only reject a part of it, and remaining we are making pro rata allotment. Yes, the theory about this even I have explained in lecture 19, I think, if I'm not wrong, or maybe a lecture previous to it or next to it. Yes, this is 21st lecture, and from past 2 lectures I think we are doing the concept of pro rata, so most probably the concept is included in lecture 19 if you will study if you will find it out. Yeah, so yes, again, so pro rata is to be applied in illustration 17 again. So for that we need to understand the question first of all properly. And it says Nupur Limited issued 5 lakh equity shares of rupees 10 each at a premium of 100%. Nupur Limited has issued 5 lakh equity shares of rupees 10 each. Yes, one share is of rupees 10, each at a premium of 100%. So 100% of what? Of rupees 10. And 100% of 10 rupees is obviously rupees 10 again. Yes. So what is the issue price of this share? 10 plus 10. 10 rupees the face value, and another 10 rupees of premium. Yes. And further they say on application rupees 5, on allotment rupees 2 plus premium. How much is the amount of premium? We've just understood. It is 10 rupees again, which is 100% of 10 rupees again. 10 rupees is the face value of the share. And also the amount of premium is again 10 rupees, because they've clearly written here that the amount of premium is 100%. 100% of what? Of face value. What is the face value? It is rupees 10. So the issue price is rupees 20. With application rupees 5 has been called up. With allotment rupees 2 plus premium. This is 2 plus 10. On first and final call 3 rupees. So 5 plus 2 plus 3, making it this 10. And here on in the case of allotment 2 plus premium. That premium is 100% of 10 rupees, which is again 10 rupees. So this way it is 20 rupees. Yes. If you want to see, the explanation is also given on page number 46. Calculation. 100% premium on rupees 10 per share means rupees 10, of course. Yes. Okay. Further, applications were received 2.5 times. 2.5 times of what? Of 5 lakh. In case if you are having your Kelsey, then you'll get to know that how much is the amount of applications received. It says applications were received 2.5 times. That is 2.5 times of 5 lakh. Yes. So 5 lakh into 2.5. That means the total number of applications received are 12,50,000 if you will see here. Yes. Try to understand. This is the explanation. On page number 46, explanation is given. Here it is about premium firstly. And here total application received. It is 12,50,000. They say it is 2.5 times of 5 lakh. So 2.5 times of 5 lakh is 12,50,000. Yes. Further, let us read the question. Out of which 2/5 share applications were rejected fully and pro rata allotment was made to the remaining applications. Excess application money were credited to allotment money, and still if any surplus then credited to share calls. I've already explained this, that always in the case of pro rata allotment of shares, the amount, instead of refunding it, the amount is kept as advance of allotment. And further, if the amount is still in excess, then it is to be credited to calls. It can be first call or final call. I mean, if the advance of allotment is still more, then it is to be transferred to first call and final call. Yes? It will be considered as an advance of first call and final call after considering the advance for allotment if it is in excess. Yes? So 2/5 share applications were rejected fully. So 2/5 of 12,50,000. This is 12,50,000 into 2 by 5. So 5 lakh applications have been rejected. That simply means that pro rata allotment of share has been made. Total applications received 12,50,000. 12,50,000 into 2 by 5. 2/5 has been rejected. So 12,50,000, 2/5 of that is 5 lakh. So 5 lakh has been rejected. So obviously shares have been allotted to remaining applicants, which is 7,50,000. Yes? Further, working notes are given here. This if you will study later, then it will be better. Let us move towards the understanding of journal entries at first. In that, I'll explain you the amount. And then if you will see this calculation, it will be clear. Okay. So the very first journal entry, simply we know it is always similar. So the first journal entry, it says bank account debit to equity share application account. Obviously, the first journal entry in each and every sum remains same. Yes, there has been no change in this journal entry till date. The first journal entry says bank account debit to equity share application account. So applications have been received for 12,50,000 shares. How? 2.5 times of 5 lakh. So 2.5 times of 5 lakh is what? It is 12,50,000 shares. And what is the amount called up with application? Rupees 5. Here it is. And applications were received 2.5 times. So 12,50,000 shares into 5 gives you 62,50,000 rupees. Yes? Now, in 12,50,000 shares, there is excess amount. There is also an amount which has been refunded. There is also an amount of pro rata allotment of shares, the one that we are going to keep advance of allotment. So let us understand. We'll split all the amounts in second journal entry, which says equity share application account debit 62,50,000 to equity share capital account. How many shares we have issued? 5 lakh. So obviously 5 lakh into 5 is to be transferred to equity share capital account, being application money received. It's just that simple. 25 lakh. How? 5 lakh into 5. Yes? Now talking about the amount that is to be transferred to share allotment account, the surplus amount. So to equity share allotment account, 12,50,000. How? Let us see in the calculation. It is given here. Surplus amount transferred to share allotment, 12,50,000. Yes, you can also obtain it by calculating simply all the calculations have been presented here. Yes. If you want a proper explanation, then total number of applications received 12 lakh 50,000, of which 5 lakh is rejected completely. Yes. So obviously to bank, it is clearly written here 2/5 has been rejected. In calculation, if you will see, that means 5 lakh applications out of 12 lakh 50,000 has been completely rejected. So obviously 5 lakh into 5. The amount with application is rupees 5 and 5 lakh applications have been rejected. So 25 lakh here in bank and remaining 25 lakh is in equity share capital account. So the advance can also be simply obtained this way. 62 lakh 50,000 minus 25 lakh, again minus 25 lakh will give you 12 lakh 50,000 rupees. Yes? Now, if you want a logical explanation to this. So, 12 lakh 50,000 total applications have been received, out of which 5 lakh has been rejected. And remaining is 7 lakh 50,000. Out of 7 lakh 50,000, 5 lakh I have issued obviously. So remaining pro rata allotment is to 2 lakh 50,000 shares. So 2 lakh 50,000 shares into 5 gives you 12 lakh 50,000 again. Just that simple. Yes, let me quickly repeat it for the last time. The company has issued 5 lakh equity shares. Company has received applications 12 lakh 50,000 shares, out of which 2/5 has been rejected. So 5 lakh rejected. Remaining 7 lakh 50 has been accepted. Out of 7 lakh 50,000, 5 lakh is to be allotted obviously because 5 lakh has been issued. So company was supposed to reject all the remaining excess applications, but instead company has made pro rata allotment. 2 lakh 50,000 shares. Yes. So 2 lakh 50,000 shares into 5. That is to be transferred to share allotment, which gives you 12 lakh 50,000. Remaining 5 lakh has been rejected. And obviously, the main 5 lakh shares issued has been transferred to equity share capital account. Let us read the narration. Being amount on 5 lakh allotted shares to share capital account, surplus amount to share allotment account, where amount refunded on 5 lakh rejected to applicants. Alright. So now, allotment money becomes due. Obviously, once we are done dealing with the stage of application, the next step is when allotment money becomes due. And what is the journal entry for that? Equity share allotment account debit to equity share capital account to securities premium account. Premium also becomes due. Why? Let us check the question for that. This is allotment. It is 2 plus premium. Premium is how much? 100% of 10 rupees, which is 10 rupees. So overall allotment is of 12 rupees, of which 2 is of share capital and 10 rupees is of premium. Premium becomes due and hence it is separately credited to securities premium account. So the journal entry when allotment money becomes due is equity share allotment account debit 5 lakh into 12, 60 lakh. Of which to equity share capital account 5 lakh into 2, 10 lakh. I am going little bit slow in this explanation. So if you want to write down the calculation that 5 lakh into 2 into equity share capital account, you can. It becomes easy to understand. Further, to securities premium account, 5 lakh into 10, which gives you 50 lakh rupees. Alright? Obviously, the next step is about receipt of allotment money. The journal entry for receipt of allotment money is bank account debit to equity share allotment account. Now, 60 lakh becomes due, but the receipt is only of 47 lakh 50,000. How? then this is related with journal entry number 2. See here, already we have received 12,50,000 as an advance amount of allotment. So obviously it is not to be received for the second time. Out of 60 lakh, 12,50,000 is already received. So remaining 47,50,000 rupees is received at the time of allotment. Simple? Fine then. Let us move ahead. Journal entry number 5. Obviously, after allotment, equity share first and final call becomes due. Yes? So the journal entry for that is equity share first and final call account debit to equity share capital account. How many shares? 5 lakh. What is the amount for first and final call? Rupees 3. So 5 lakh into 3 gives you 15 lakh rupees. And there is no calls in arrears in this case. So the next journal entry is obviously about receipt of first and final call. And the journal entry for which says bank account debit to equity share first and final call account. And 15 lakh is received. This completes your sum and the total of debit and credit is always same. Yes? So we have a new topic after this. And we are going to understand the journal entries for the same so that we can do a sum of similar kind in next lecture on the basis of this journal entries. Alright, let us quickly understand. Before that, let me just give you a homework of similar kind which I will also repeat at the end of this lecture. Yes, it is illustration 17 and sum number 19 and 20 from exercise which are similar to this. Yes? Okay. So we have a new topic and again a very simple topic on page number 48 in your textbook, and also you have that topic on your screen, I mean visible clearly. Alright. It says for opening share application and allotment account. Now, till date we have learned that the amount of share is called up in installments. That is first with application, then with allotment, then with first call, and then with final call. But now, if the amount of share application is to be called up all together, yes, during that time a joint account is maintained, which is said share application and allotment account. Yes, so that type of sum we are going to do in next lecture, for which journal entries I am going to explain in this lecture. So on page number 48 it is given, it is also given on your screen. Let us begin. Nowadays it is practice to keep a common account for share application and allotment instead of two separate accounts. In such a case, a joint account named share application and allotment account is opened. Then all entries relating to application and allotment are made in this account. When a joint account is maintained, the journal entries are recorded in following manner. Now, just the way you have learned journal entries in the very beginning of this chapter, which was about installments, similarly, now you are going to learn and you are going to understand the journal entries when a joint account of application and allotment is to be maintained. Yes? So the first journal entry says, on receipt of application money, bank account debit to share application and allotment account. Number of shares applied into application money per share. There is nothing new in this except for the addition of word allotment. What is the usual journal entry? Just try to recall. It is bank account debit to equity share application account. But here the joint account is maintained, and hence instead of just writing down equity share application, we are writing it as share application and allotment account. Nothing else. Yes? Further, second journal entry. for transfer of application money to share capital and allotment money due. Second journal entry is a combination of transfer of application money and allotment money becomes due. You already know these journal entries. You just have to combine them. So share application and allotment account debit to share capital account. Understand. What is the journal entry for transfer of application money to capital account? It is share application debit to share capital. And what is the journal entry when allotment money becomes due? Share allotment to share capital. In both the cases, share capital is credited. So instead of writing two journal entries, we have combined it. Application is also debited and allotment is also debited. So we have debited it together, which makes it share application and allotment account debit to share capital account. Share capital is credited in both the cases. So we have credited it just once with the amount of both. See, you have explanation about amount here. Number of shares allotted into application money per share plus allotment money per share. Yes? Further, on refund of money to applicants on rejected applications. In case of oversubscription, when you reject applications, what is the journal entry that you write? That is the second journal entry given on page number 9. What do we write? Share application to bank. So instead of writing application, we are writing it application and allotment. Yes? So share application and allotment account debit to bank account. Lastly, on receipt of allotment money. What is the usual entry for receipt of allotment money? It is bank account debit to share allotment account. Yes? But here share allotment account is not the only account. It is combined with application. So obviously you have to write it as bank account debit to share application and allotment account. Yes? And that's all. We have only 4 journal entries for this topic. And we also have a sum, the very next illustration, and we also have a sum of similar kind in the exercise that we are going to do in next lecture. So for now, that's all. And let us revise what is your homework. It is illustration 17, of course, that we have done in today's lecture. And from exercise, you are going to do sum number 19 and 20, which are given on page number 62. And also sum number 21. Sum number 21 is exactly similar to illustration 17. I repeat, sum number 21 that I have not mentioned here by mistake, but still you have to do. So overall sum number 19, 20 and 21. 21 particularly is completely similar to illustration 17 that we have understood in today's lecture. Yes? So that's all for today. We'll see you soon in next lecture. Till then, stay home, stay safe and study well.